Now, when you talk about the manipulation can't last forever, what do you see that could be a catalyst for it ending? And when do you see this time period happening when it ends? Could it be in 2011?
Yes, I believe it can be. I think we're pretty close to all available silver above ground being exhausted. Now, that doesn't mean there's no silver above ground. There's no silver available above ground at the current prices. Why do I say that? Well, there are significant signs of shortages. For example, the big giveaway is the huge backwardation in silver on the COMEX futures complex. That is now around $1.20 between the front month and December 2015. This is unprecedented. I mean, we've never, ever seen a backwardation in silver like we're seeing today. I mean, typically it's been a few cents backwardation in the first few month contract, not talking about dollars over the entire complex. And backwardation, for the listeners who don't know what that is, typically a commodity is in contango, which means that later months are priced at a higher price than the current month. Backwardation is the opposite, where the front month is more expensive than future month. What does that mean? It means that investors are paying a premium to have silver now, and are less keen to hold contracts that deliver silver in the future. And that's a sure sign that investors are less confident they will get silver in the future. So that's the first sign that there's a shortage. The next sign is that I've seen the open interest in the COMEX futures increase, yet the inventory keeps declining. And the registered inventory, which is what's available for delivery against futures contracts, is about 43 million ounces, and it's been declining. And that's a very small amount of silver to be backing 675 million ounces of open interest. What we've seen this month is that there's almost no deliveries. The first delivery notice day was on 28th of February, and there's only been 303 delivery notices issued so far. And the outstanding contracts today are 1,840. Typically, you see a large amount of delivery notices issued by the shorts at first delivery notice day, because the sooner they deliver, the sooner they stop paying storage and insurance on their bullion. When you see low deliveries, that's a sign that they don't have available silver. What I've also seen is that the open interest is declining without delivery notices being issued. Well, that suggests that there's some cash settlements going on behind the scenes that is stopping these standing for delivery. And then we've seen the U.S. Mint again suspend production of the uncirculated silver eagles. They're rationing the supply of the bullion coins. Several sources have told me that there's actually a shortage of 1,000-ounce bars, which are the good delivery bars for LBMA or for COMEX. So there's many different signs that I'm seeing that there is a significant shortage of silver. And I think once the market locks up, then prices will go parabolic, and of course it will then be almost impossible to maintain this manipulation in the paper market.
Now, why do you think it is we haven't seen some billionaire like Jim Rogers or an Eric Sprott even? I mean, just come in and finally just crush this thing?
I think that's been suggested a lot, but billionaires didn't become billionaires by going in and blowing up markets. Billionaires become billionaires by going in and stealthily investing and without changing the price if they can. What's happening, and I know this from sources in London, is that there's some very big entities that have been buying silver on the London spot market and taking delivery. And the have no interest in blowing up the market because they know at some stage silver will find its true market price. Their interest is to get as much as they possibly can before that happens. So there is, I see no point of any of those guys wanting to go on the COMEX and stand for delivery and blow the market up. It will happen because there are enough people realizing the investment opportunity here, and they're taking advantage of it.
How can people learn more about you, your information that you have out on the internet? Where can they reach you?
I have a website which is www.marketforceanalysis.com, and that's all one word. And we run a service where it's essentially a timing service. It's a little unique in that we've actually filed 2 patents on our system. We extract supply and demand information from the futures market, and economics tells us that the essence of price movements is driven by difference in supply and demand. And so that's what we extract, and that gives us a unique view of where the markets are going. So we supply our subscribers with information on how the market's going to move in the next 2 weeks and also in the longer term. And we also have a portfolio of junior mining stocks that we selected from a review of over 800 different companies. So we've chosen what we think is a stellar set of junior companies that will benefit from the metals moving up in the years to come. The portfolio is up over 85% since inception, which was just over a year ago.
Yeah, because especially the juniors. I mean, the juniors, it amazes me that they've really been ignored during this bull market.
The juniors are extremely undervalued, and I think many people are nervous because of what happened in 2008, where many of the juniors dropped 90%. And I think many people fear another 2008 type meltdown. I don't see that happening. I think we may see a little pullback in the stock market, but I think what we're experiencing is a breakdown of the currency. The dollar is failing. And so as the dollar fails, everything else will go up in nominal value. If you divide something by 0, it gets to a very big nominal number. So just like we saw in Zimbabwe, like in Weimar, Germany, in Argentina, when the currency fails, the stock market appears to go to very large valuations, whereas in fact it's just in nominal terms, it's going up because of the failure of the currency. So I see that is what's going to happen here, and the Dow Jones and the equities in general will go up because of inflation and hyperinflation. But if you're just invested in the general market, you will not profit because your purchasing power will not be going up. Where you will profit is by owning junior mining stocks, whose value will go up much faster than the rate of loss of purchasing power of the currency. So you'll gain in real terms if you're owning precious metal stocks. You might at best hold your purchasing power if you hold some good quality general equities.
Now, Adrian, because you mentioned it, I got to ask you one more question because it's on the hearts of a lot of subscribers and people who I speak with. Silver and hyperinflation. You've obviously made the case that there's manipulation. So I just want to confirm for people that in your opinion, whether there's deflation, inflation, stagflation, it doesn't matter for silver.
Yeah, I have written an article that points out that you cannot have deflation in a fiat money system, and there's no evidence that has ever occurred. People will point to Japan, but Japan didn't suffer deflation. Japan suffered disinflation, and there are 2 operating modes of a monetary system. There's obviously it can be neutrally balanced, but you'll have either inflation or disinflation. And you can have that even under a gold standard. When you had the Spanish conquistadors bringing gold back from South America to Spain, they suffered a huge inflation because they were increasing their money supply. But there is a finite limit to that. When you stop increasing the money supply, your prices then stabilize. Now, there are two failure modes of the monetary system, which is hyperinflation and deflation. So deflation is not something you can operate under. It's a failure of the monetary system. And to have deflation, you have to have a monetary system which is based on something that has real intrinsic value. So we had deflation in 1929 because we were on a gold standard, and because the banks had been producing too many dollar bills, people went to the bank and tried to take their gold out of the bank and give in their dollar bills. And then they hoarded their gold. Well, once people hoard money and don't spend it, then your economy comes to a screaming halt. And your money has high value, and so you get deflation. Everything becomes lower priced in that currency. What can you do to solve that problem? Well, it's very difficult, because how do you get people to bring their gold back to the banks and get the system circulating again? You can't. They don't trust the banks. So what Roosevelt did was he solved the problem by stealing the money back, the gold back again. He confiscated the gold and issued dollar bills to everybody. And then it still wasn't sure that they could spend them, because they could still hoard those dollar bills. Well, his solution to that was to create inflation by changing the value of gold from $22.67 per ounce to $35 an ounce. And of course, then the implication is, if you don't spend the dollars now, you'll be inflated again, and you'll lose purchasing power. So deflation can only exist if you've got a valuable backing to your monetary system. If you've got a fiat money system, like in 2008, people took their money out of the bank, they sold a lot of their stocks, they sold commodities, and they hoarded money. And so the Federal Reserve decided that they were going to make them spend. They weren't allowed to hoard the money and let us go into deflation. So they printed more money. And if you don't spend that and you hoard it, well, they'll print some more. And they'll keep going until they've got inflation. So that is essentially what has happened. And we are heading now to hyperinflation, because the Federal Reserve has just printed far too much money. But the failure mode we're heading towards is hyperinflation, not deflation. So there's no case of that happening in the fiat money system.
Well, Adrian, we've run out of time. Thank you so much for your insight on the silver market, as well as the economy, inflation, deflation. We really appreciate it. Thank you very much.
Thank you, Daniel. It's been a pleasure.